This is part two of the gold trade that we took. That's going to result in likely a 15R trade, which will make us about 8R after securing profits along the way. So the final bit is execution, because previously, you can go to the other video, it's also in the link. We confirmed that the daily time frame, the 4-hour time frame, the hourly, the 15-minute, the 5-minute were all in our favor. Therefore, what we are looking for was justification to enter after seeing that sellers were induced into the market and buyers were stopped out, so that we can enter from a protected standpoint, right? Because if we're just buying randomly, that'll likely get liquidated. But if we buy on the liquidation of buyers and the inducement of sellers, you will likely be protected. So what do we wait for? Market opens, we get a bearish break of structure, and you're probably asking, why didn't you buy right here? I could have. But what happens? I mean, we were looking for, I was essentially waiting for two things. One was news, which was on this candle, right? I needed to see that news would actually justify my bias even further. And then more importantly, I also wanted to see price action close in stronger manners. So when we saw this break of structure here, I still wanted to see price retrace and actually close in a stronger manner, or at least bounce off of this fair value gap. But what happened was price actually invalidated this fair value gap, at which point I said, news is not here yet. I can just wait. So what did I do? Waited for news. I saw a break of structure. I said, okay, this is the order block area. And then when news came, we saw an expansionary move, and the news data said that we were within our bias, So I was like, interesting. This is a good time to long because of how bullish this candle is, expecting a continuation. Now, one could say you can also wait a few more minutes, because news likely leads to a liquidity event where they're going to liquidate traders. So you can just wait for the next liquidation and then enter after that liquidation, right? And what does that look like? Very simple. Break of structure to the downside, boom. Price never breaks above here. That means no break of structure to the upside. You still continue, liquidate everyone that thought that this was the move, right? While justifying this order block. And then what happens? We stop those out, and then we break structure to the upside for the first time. You enter here just like we did here, but you would have had a much safer time had you entered here. And from there, you're pretty much going to ride the wave. And you pretty much get to take part in all of this. So now I'm just expecting my final take profit to get hit. And yeah, this was the trade. So I hope you guys learned something from this, because it goes over one time frame alignment, so that you guys can always look for that. Utilizing news to also fuel your bias. Waiting for buyers to get stopped out and sellers to get induced before you enter the market, so that you can enter from a protected state and you won't get stopped out, or at least you'll have a less likelihood of being stopped out. And yeah, I hope you found this educational. I'll see you guys in the next one. And if you guys do find these educational, just let me know in the comments. I'd like to talk about this trade that I was currently looking at for GU. So I'm still waiting for it to happen. I'm waiting for an entry. But essentially, GU is bearish on the day. Well, it's actually bullish, but I'm expecting it retrace from the weekly standpoint, because it's a downtrend. I'm expecting at least us to fill this fair value gap. So then I scale down to the 4-hour, because the daily in my head is bearish. And then the 4-hour has broken structure here. As you can tell, the 4-hour is bearish right now. So all I'm looking for right now is the hourlies to justify my entry, right? The hourly is also bearish. So now I just want to retrace into a premium area, because the 15-minute is also bearish. So now I want to get the 5-minute to be bearish, because it's currently bullish. So we want to see the 5-minute go up, retrace, and then break structure to the downside. So from there, we can enter. That's pretty much it. It's that simple. Because we said that the daily is going to retrace, we're expecting that the 4-hour is going to retrace. This going down is because it's bearish. The hourly is bearish. The 15 is bearish. The 5-minute is currently bullish. So we're going to wait for the 5-minute to retrace. And when that's done, it'll break structure to the downside, at which point we'll enter. Or if we get to a premium price point, we'll just wait for a 1-minute break of structure, and then wait for other confluences like fair value gaps and order blocks, and